Hey everyone, welcome to Shunya One, episode 152. How are you doing, Amit? How's it going?
I'm good, man. I'm good. How have things been with you?
Things are interesting. It's been
Okay,
a bunch of holidays here and now, but
we're
we've
in the
still been
holiday season.
pushing the episodes out.
Yes, we have. But it's the holiday season. This is that time of year. I saw a really interesting, a really funny tweet from somebody, which I don't buy. But October, November, and December feel like the Friday of the October, November, December of the year feel like the Friday. I'm done for the year. You know, which
Yeah,
is
if only we could be done for the
if
year.
I am not done for the year. I don't even feel. I feel like we have a long way to go for the year. But yeah,
Yeah, yeah. But it
yeah.
makes stuff, it does make stuff, well, I would say interesting because people do a bunch of new things in holidays or at least look forward to new things. Uh, Especially the
That
kind of folks we talk to, all the founders we talk to, they're all like, everything is geared around holidays and spending and
yeah.
yeah.
Impressive
So
segue. Impressive segue
yeah,
into the fancy new card that we're going to be talking about. Or is it
exactly.
a card or is it a fintech or how would you describe it?
It is a card, I guess. They do
It is a
actually
card.
send you a
It's
physical
a
card.
card. It's a
Yes.
physical card. Yeah, but
Yeah.
it's a
It's a
fintech
credit
based
card.
card, right? It's a tech based card. But
Correct.
really
So we're
interesting
talking
idea,
to
right?
yeah, we're talking to Nitin Gupta, who's the founder and CEO of Uni. And funnily enough, Uni is like his what second or
Uh,
third
It
startup.
was
He's
yeah,
been
a number of them, right?
a serial entrepreneur and a big guy in the fintech space for a long time.
Mhm.
And we're continuing our sort of fintech stalwart,
Yes, we are.
series. It seems so.
It's an unofficial
it-
series, but it's a good series that we have here.
exactly, and it's the never dying flavor of Indian startups. It seems so.
Yeah.
I think it's only getting better. So yeah, very interesting conversation with Nitin, and of course, a lot of insight as to why he's building a credit card. Like which is, compared to all the other sort of fintech options that you might build, it's one
Mhm.
of those sort of seems like it's a small size of the market. Given that even regular credit cards are hardly in the country, but yeah, he has some very cool insights for us to share as to why it's a big enough
You know,
target to go after.
it's a theme that keeps coming up, right? I think as we talk to more and more of these fintech founders, right? One of the themes that I see as common that comes up is that one of the great things about fintech is you don't have to be a market leader over there. Even if you
Yeah.
become a sizable chunk of the market, it's still a meaningfully large business, which I think is something that
Yeah.
we've heard from a
Yeah.
number of founders so far. I think we'll see more of that. We'll hear more of that as we continue with the fintech series.
Hey Nitin, how are you doing? Welcome to the show.
Thank you. Thank you so much, Lalit. Very, very excited to be here. Hi, Amit.
Hi, great to have you here.
Yeah, and we were obviously talking earlier. We're all, of course, in different cities, but good to see that you have become you've fallen in love with Bangalore after having moved there a few
Yeah,
years
yeah.
ago, from the sound of it.
I think the weather makes you a fan.
And in spite of that, in spite of like building your another fintech company, you chose to do it in Bangalore instead of good old Bombay, where things used to happen.
Yeah, Bombay, you have traditional financial players. You don't have fintechs in Bombay. Fintechs are either there
Ah,
in NCR or they are there in Bangalore, and more Bangalore than anywhere else.
that is true. That is true. We've been fortunate to have our fair share of folks come talk to us, and yes, that's absolutely the truth. But Nitin, thank you, for sharing, being here today, and we obviously want to understand a little bit for everyone listening about your personal sort of journey as well, part of some very very iconic, I would say, companies in India, which defined what fintechs can aspire to be today. So why don't you give us a little background on your personal sort of entrepreneurship journey?
Sure, sure. My entrepreneurial journey started in 2008. My first company was this couponing startup called Coach Guru. It
Mhm.
started as a local search, and I still remember in the first 12 months, we would have experimented with the 8 or 9 different ideas to find a product market fit. The idea that worked, it scaled quite well. In second year of our business, we did more than a crore in revenues, almost like 85% gross margin business. That was good.
Nice.
Then I exited Coach Guru. That was what my company was called, and took a break, and then I started PayU with Naspers, PayU India.
Yeah.
That company, it was a payment gateway, and I started that in 2011. And that company went from one milestone to the other over a 5-year
Yeah.
period. Um,
Yeah. And I would say
I think,
continues to do so.
yeah, that's true. That's true.
Yeah.
We did bunch of things there. We of course were over that 5-year period. We became the second largest payment gateway, just behind BillDesk. We launched a checkout called PayUMoney, which then
Yeah.
became far more than that. Uh, it was uh, it was a play between merchants, small merchants, and customers. We launched a POS machine there, and towards
Yeah.
the fag end in 2016, I was actually building a credit card with one of my co-founders now in uni, and that card was imagined like the Apple Card. Apple Card, mind you, was launched in
Ah,
2018, so we were ahead of our
mhm.
time. Uh, then
Nice.
then I exited PayU. That year, I think we processed $6 billion the year that I exited, and the company was quite valuable. Uh, uh,
You did well.
yeah. Thank you for saying that.
Eh, I would say, you guys obviously inspired, like I said, a lot of other fintechs to even, come into fruition. So
Mhm.
I
thanks
hope
for
so.
setting that up. I think you all also like did like massive acquisitions, right? You all,
Yeah.
even
We were,
grew
uh,
inorganically,
in 2016, we acquired a company called Citrus. We
Right.
were
right?
2 times bigger than them, 3, 4 times bigger than them. And when that acquisition happened, with that acquisition, the new management, Citrus management, took over PayU and I exited PayU. Then I took a break for a long 1 year. Actually, that was the best 1 year if I look back. It was chill, and it was a discovery of self journey. No, it was
You,
a
you
journey
you
of
should
self
talk
discovery.
about that actually. Not too many people, I mean, I'm sure in our audience, not too many people have had a chance to take a break. Let me say that qualify it that way. But it's good to hear that it's possible to take a break,
Yeah.
whatever it may allow you to do.
I think breaks are more of a mental barrier than anything else. I think
Yeah.
uh, I think most of us have this middle class upbringing, right, where you're very goal
You have to
oriented
be
and
busy.
yeah, goal oriented, busy, and at the same time, stability in income is seen as a proof of goodness. Uh,
Yes.
Mm.
right. So, and most people don't have enough savings that they can afford long, large breaks. So,
Right.
but once you break this mental barrier, right, you'll realize that it's not the savings that has been holding you back; it's you yourself.
Mm.
But taking a break without a plan is also dangerous. Uh, first three,
Yeah.
4 months are fun, right? You really don't do anything; you just have a lot of fun. But after that, if you have been very busy in your past life, you start thinking, boss, what next? And you then start exploring ideas. And if you don't zero in on an idea soon enough, then bad ideas also start to look really good.
That's
Uh,
well said.
yeah, so people who take a break because they want to start up, you will,
Yeah.
and they haven't found an idea 6 months later, they'll end up committing to a bad idea and then
Yeah.
not pursuing this further. Um,
Yeah.
for me, in that 1 year, many things happened. I'll not go into those gory details. Uh, but what conclusion I drew from there was uh, that the best measure of entrepreneurship is when a company operates at scale, when company operates profitably, and when a company can operate sustainably for almost forever.
Hmm.
Uh, Now, when I built PayU, right, it was a company at scale. It was about to turn profitable. Also, around that time, I saw many companies go from massive multi-billion private valuation to practically nothing. Right? I basically realized that sustainability is a very important piece of the puzzle.
Hmm.
There are companies you will see they will list, and 25 years later they'll disappear. Blockbuster, right? Many examples. But there are companies at the same time like Unilever and P&G and IDC who have been there for 100 years, right? And it's not that the business models have been same across those 100 years. It's just that these companies have managed to keep evolving themselves to stay relevant in today's day and age.
Right.
And I realized that this is what true test of entrepreneurship is. Not just create a company which is massive, not just create a company which is profitable, but to create a company which can last well beyond the entrepreneur. And I
The
realized that
legacy. Yeah.
not legacy, but sustainability, right? Evolution. Legacy is something else. Evolution is something else. Evolution is the important word here.
Right.
And I realized that a great way to measure that is public markets. Because
Correct.
in private markets, things can remain hidden, right? You may get overvalued, people may not know about you. But in public markets,
Right.
it's out there. And
Right.
therefore, I realized that whatever I have to do, an IPO is a very key integral part of that journey.
So you're saying that being having your company listed in public markets keeps the business honest in some ways? Is that what you're trying to say here?
Not the business honest,
No, I mean like
the
honest from a
entrepreneur honest.
correct, but from
And I'm
I mean like
differentiating between the business and the entrepreneur.
okay,
I'm saying the entrepreneur knows what their business is worth. If the business is not sustainable, right, you will see that signal written on the wall in big words. Your stock
right.
is $0. Right? And that's why I said test of entrepreneurship, not really test of anything else.
Interesting.
And I also, while I was in PayU, right, we went from payments to start building this credit card, right? We started this financial services journey. I saw in India, financial services is such a beautiful business that even with a small customer base, you can create a very, very valuable business. In fact, in most financial services businesses, if you're catering to the top 100 million Indians, a million customer base translates to roughly a billion in valuation. And no network effects. That means that even if you're not the number one or number two player, which holds true for most industries, even as the number 3 or number 10, you can make profits and be valuable. Look at banks, right? No bank has more than 9-10% market share. Banks, even with 1% market share, are profitable and valuable.
Yeah.
Same for life insurance companies, same for many others. And so I decided next is financial services hi karenge. The next thing that we should do has to be financial services. At that point of time, I strongly believed that to build a large financial services business, what matters is distribution. Product, I felt, is something that can be copied in 12 months. It's a financial product. It's basically easy to manufacture if you have the license and therefore can be copied in 12. That's the viewpoint I had way back in 2017. And that's why I started looking for meaningful advantages which can help build such a company. Now, Ola had this massive consumer base and massive driver base.
Right.
Right? So it seemed like that in Ola, if you can leverage that distribution base, you can transform that company from, it had a captive wallet called Ola Money. You could
Right.
transform that business from a captive wallet to a very large financial services behemoth, leveraging that distribution, provided those products can be replicated.
Yeah.
That's how I became CEO of Ola Financial Services. And I think at Ola, we defined embedded finance for India, and we showed in ways what embedded finance can mean. Our first product was this insurance policy, which was selling with every ride.
Yeah.
We
Yeah.
started selling 20 million policies a month. Right? I think we became the world's largest micro insurer, literally over like 3 or 4 months.
Wow.
Beautiful product, strong product market fit. Then we launched this product called Ola Money Postpaid, where users would either put money in their wallet and take a ride. We said, why don't you take a ride and pay us back later?
Yes, it. Yeah, I'm a long time customer of that. I love it.
Same here.
That gave us phenomenal loyalty.
Yeah.
I still remember that once we gave a customer a line which was 3x their average spend, the market share between Uber and Ola shifted in favor of Ola drastically because people stopped thinking about payments
Yeah.
completely.
Yeah.
We ramped it up to 2 million monthly active customers and our contribution margin 3, right, was positive. So we were making money as well. We were not losing money.
Yeah.
We were able to make money. Uh, Then I launched this credit card with SBI. It was a vertical black card. Visa logo for the first time ever was in the center. Both bank and Ola logo was on the back of the card. Very clean rewards. You would get 1% rewards, and it would come to your Ola Money wallet daily. Right?
Yeah.
That experience also taught me a lot. What works, what doesn't work, what's good, what's not good about this entire credit card industry. But it also gave me some very deep insights into distribution. I came to the conclusion that if you are selling a contextual product, then distribution helps. Your distribution of Ola helps, right? Because contextually, when I sold insurance or Ola Money postpaid, they sold really well. But people are fundamentally coming to Ola to take a ride. So if I try to sell them any other financial product, like a credit card, then I'm practically doing database marketing.
Yeah.
And once I understood this, right, I realized that distribution is not really the game changer. The second thing that happened while I was there is that I realized that it's very naive to assume that financial products, particularly credit card like products, can be replicated by anybody else. The financial portion of the product can be replicated, but the tech product, the entire depth that you can solve for there, that's not easily replicable. And when I had these realizations, I felt, you know what, it will be as hard to build an IPOable company inside Ola as it will be outside it. Simply because distribution is database marketing, right? And then, like a typical entrepreneur, you ask this question, then why build it for somebody else? Why not build it for yourself? It's going to be as hard.
Yeah.
So that's when I exited Ola. While Ola Financial Services was pursuing a large gamut of financial products, I zeroed in on just credit cards opportunity, credit cards and pay later cards. And that's when I started Uni, raising a $18.5 million seed round from Lightspeed and Excel. And in this journey, I have two co-founders and 3 people in my leadership team. So I'm very lucky that way to be doing this. So that's a very quick glimpse, not too quick. We are 15 minutes down. So
No, but so why
No,
credit
this
cards?
is
What
perfect,
was it
yeah.
about credit cards that got you that excited?
I think 3 fundamental things. The first thing is that it's a fairly attractive market. If you look at credit cards in India, there are about 100 billion in spends which happen on credit cards. The revenues are about 7 billion plus, and the PBT, actually the PAT, is more than $1 billion. In fact, if you look at the market cap attributable to the credit card industry in India, it's almost $60 billion. So SBI card is a great example, right? 12 million cards, 12 billion market cap. And there's 60 million cards in the market. So a million card, $1 billion, if you go to that formula, right, it's 60 billion from there. But there's another way to do this math. HDFC Bank is a $110 million bank. 25% of its profits comes from credit card business. So $27 billion for HDFC Bank. So 12 plus 27, you're almost at 39, right? And then you can keep adding the rest. This is profits. So $60 billion market cap you don't find often. And then you look at the underlying macro. There are about 150 million people today who would shop online. There are about 190 million people who have taken a loan in the past from bureau. So they have a presence on bureau, performance on bureau. So you say, boss, why is it that there are only 60 million cards and 35 million Indians holding those 60 million cards? What could this number be in 5 years, given these macros? A consensus that forms, right, is that there should be about 100 million Indians holding a credit
With
card or a
cards.
payment product
Yeah.
in 5 years' time. And the number of cards in turn will be like more closer to 200 million. And therefore, the market cap attributable to these 200 million cards will be about 150, $200 billion.
So it's just the statistics say that it has to happen.
Yeah. And $100 billion incremental market cap will get created in the next 5, 6, 7 years.
And there's a lot of opportunity in that. Really interesting.
So, I mean, and this is the opportunity. I mean, correct me if I'm wrong, Nitin. This is, credit cards has been a hotly contested or at least debated, I would say, financial product in India, right? It's forever. It's been there forever, but it's the catchment area of people using it has been in this same size, this 20 to, I think you mentioned 35 million now.
Well, this was 20 million 5, 6 years ago. So it's growing. It's growing pretty steadily. And it will continue to grow.
Yeah, but everything else has grown in other leaps and bounds, right? Let's say the addressable market for every other product has sort of grown. Let's say the geo effect or whatever else has sort of catapulted all of that, right?
So
this one has been this. Yeah.
The same effect is flowing down here. Sorry, I'm interrupting you.
Yeah. No, please. That's what we're trying to understand.
See, consumption. Oh, you've heard of that, right? Roti kapda makan.
Right.
When you are a $2,000 average GDP, 2,000 per capita GDP, per capita income GDP country, right? Your
the focus area, you would say.
Yeah, your consumption is only that much. But once you cross, a $7,000-8,000 number, your consumption suddenly explodes. Now, in India, while the average may be low, the number of people operating in the $7,000-8,000 is continuously increasing. And when you have this continuously increasing number, right, their need for more products and services go up. They're now looking beyond roti kapda makan.
Right.
Financial basket of goods, whether it's wealth goods, insurance goods, credit cards, right? They start getting consumed more as the number of people in this basket increases. In India, the addressable opportunity, the number of people who would consume these kind of goods was 30 to 40 million 5, 6 years ago. That has increased to almost like 150 million now. And so a corresponding effect of that is that everything is growing. And therefore, credit card is also poised to grow. So is life insurance and so is wealth. But credit card is poised to grow. And that's why this trend you can ride now. And this trend, right, will be there even 5 years from now because the market will again have an opportunity to triple up. So the next decade is super exciting for India as long as India can grow at 7-8% GDP.
Yeah, you're talking about 10% of the population right now who is in that category that you're talking about, right? And you're right, as the economy develops and more people kind of start getting higher income, you'll see that. So I want to ask you a question about something you mentioned a little earlier, right? You said that once people get to 7,000-8,000 in terms of average incomes, at that point in time, the spending explodes. Do you mean the like 7,000 is 3.5 times 2,000? Do you mean like that way explode, or do you mean that people start availing of credit in more aggressive ways?
No, what I mean is that, see, there's a cost of food, but that cost of food is very similar across levels. When you have $2,000, you have only enough money to afford food, basic fuel, basic housing, basic clothing. But when that money goes up, you now have disposable income to do more.
Right.
And that disposable income defines your consumption basket.
Correct.
A credit card is useless if you don't have a consumption basket.
Right.
What will you pay for with it?
Yeah.
True.
Yeah. I mean, the whole,
averages, right? There's significant population above it as well. Sorry.
Yeah, and the whole consumption economy, as the word I've also heard, is it starts after that you start discretionary spends after that
Yeah.
threshold. What you're talking about is discretionary spending, right? You, after your roti kapda makan is taken care of, you spend on
Yeah.
things.
Yeah.
The
So
correlation I think
online
we're
purchase
making, yeah,
behavior, when you see
yeah,
people buying online, that's discretionary buying. It's a great
yeah.
indicator of the size of the population with discretionary spending power.
And I think what you're saying also is, and or rather we are seeing, is that with discretionary spending power, people also choose to avail these credit products more because
Yeah, yeah,
they
everything
have sort
follows,
of
right?
trust in
I'll
the
buy
credit
life
cycle.
insurance.
And yeah,
I'll buy
yeah,
wealth products. I'll buy clothes online. I'll do this. I will consume food.
yeah.
Now to do this, I need payment products. Earlier, I was consuming from bank account, but now I qualify for a credit card. It seems like a smarter product. I use a credit card and so on and so forth.
Correct.
Yeah,
No, Nitin, I mean, obviously there's so much to unpack here. I want to, take a quick break, come back and talk more about exactly what the Uni product is, of course.
sure,
All right,
sure.
let's do that.
Did you know that AI can help you recommend your next favorite podcast? In almost any field, AI can be an extremely important tool in your arsenal, but it can often seem daunting to get into. Luckily, Intel's Digital Readiness Program is here to empower everyone with the skill sets, mindsets, and tool sets to use in an AI fueled world. So you can be ready to develop AI for sports if you want to as well. As part of Intel's AI for Youth program, Intel's been working with the CBSE, Ministry of Education, and the Government of India to empower today's youth to build social impact solutions while demystifying what exactly AI is. How do you take advantage of this? Purchase an Intel Core powered PC and you get free access to 80 plus hours of immersive and hands-on training about AI. On completion of the program, along with the certificate, you get access to AI tool sets to try to put what you learn to good use. So log on to futurebanowonderful.intel.com. Future Banao Wonderful by bringing home an Intel powered PC.
Hey, welcome back, everyone. Nitin, you've shared a roadmap so far of, not just you yourself personally, but also what the market has been in India for financial products and how they've grown. And with the specific, discussion we were just having around credit cards and why they are poised to sort of grow massively, along with probably various other services in the financial market. But what I want to know is obviously exactly when you've launched Uni. I think you guys were still in stealth for a long time before actually coming out. The product is out now. I'm one of the many people on the wait list. But
Sorry, buddy.
what is the product that few people have seen and used, and how do you intend to sort of stand apart from
Yeah.
the rest of the credit card gang, like, which is obviously banks and a few other maybe fintechs as well?
So one of our core thesis is that whenever a market becomes large in size, several sub-segments emerge with different needs. Look at the smartphone market, for example, right? A decade ago, there were literally 4 smartphone launches in India. Today, you have people with varying needs, right? Somebody is indifferent to a price. Somebody is very sensitive, wants a 5, 10, 15,000 rupee phone. Somebody wants a bigger screen. Somebody wants a better processor to play games. Somebody wants a fingerprint or an iris scanner. Somebody wants a better battery, right? People have different needs, and therefore manufacturers will make different products catering to those different needs.
Right.
Same is true for credit card or credit-led payments industry too. Credit card is a very reward-oriented product, right? It gives you 30 days of credit and gives you rewards.
Yeah.
Whereas it does not necessarily fill the need of every kind of customer segment. And we found a customer segment with very different kind of a need, which we think we could have fulfilled better. So the insight actually started from a very simple observation. We saw that most Indian households in 1 or 2 months out of a year will go through a short-term liquidity issue. In a particular month, their expenses will be 40, 50,000 rupees more than the income in that month. And the reason could be anything. They were shifting a house, medical emergency, paid school fees, took a holiday, went somewhere, or it can be income related. I lost my job. I changed my job, my full and final did not come. My sales bonus did not come. And people deal with this 40,000-50,000 rupees in different ways. Nobody wants to take a personal loan for it for 2 years. Right? They know this is a 3-month, max 4-month problem. So they will first dip into their savings. If they have a fixed deposit, they'll break the fixed deposit. If they have a credit card, they revolve on the credit card. Or they will borrow from friends or family. In fact, you in your own experience would have seen people where you have lent money or otherwise. Now for these folks, we have launched this product which we call as the Pay One Third card. By default, all your transactions are split into 3 parts, paid over 3 months at 0 additional cost. And since it's a Visa card, so it works everywhere where Visa is accepted. We have basically combined a buy now, pay later line, which does pay 1/3 with a Visa card.
Nice.
And if you can pay back at end of first month, like, you club all the 3 and you pay back end of first month.
As if
like,
it were a regular Visa only card. Yeah.
Yeah, it was a regular credit card, for example. Then we give you 1% rewards or cashback, customer's choice. So what we basically say to the customer, if you have funds, keep paying us back, keep getting a 1% reward.
Right.
But if you're ever in a problem, trade off this 1% for paying over 3 months.
Very nice.
We married this with instant onboarding. So you get a digital card literally in 4 minutes. And your physical card arrives in 3 or 4 days. We married this with contextual transparency. We realized that customers want to know at that point, right, what fees, what late fees, what interest charges, what may apply. So they should know the quantum upfront when they're taking that decision of how much to pay, what not to pay. So contextual transparency. A beautiful onboarding experience. I don't know if you've seen our kit unboxing. Social media is quite filled with it.
Yeah.
And we had an instant product market fit. Customers are just loving the product. They're like, wow. So that's what
going into the, a lot of these things which you're mentioning, probably the economics of it obviously work, right? I mean, going back to your sustainable company thesis, I'm guessing the economics obviously of this still work. So you can do buy now, pay later across 3 months at 0% interest, so to speak.
I'll tell you intuitively why this works.
Yeah.
Imagine your credit score is 800. And now you're facing this liquidity issue. Yeah. When you're facing this liquidity issue, you will revolve on your credit card. You can get a personal loan with 800 score at 12%. Any bank will give you. But when you're revolving on your credit card, you will pay 40%, actually now 42% plus GST. So you're paying 50% interest rate or 4.5%, 4% plus interest rate every month, in spite of having a 800 plus credit score. Now, is that fair? That's not.
No.
What we are saying that there needs to be risk-based pricing for customers. And to a great risk customer, you can offer them superior products. This product is like that. Not every credit card customer can get our Pay 1/3 card. The best risk customers, whether they are credit card holders or they are not credit card holders, does not matter. As I said, 190 million Indians have a credit score. But if they are superior on risk, if they are pristine on risk, they will get our card. That's the simple rule. And so the losses on this business, in spite of being a lending business, we don't expect that. And that makes the economics work.
So what's the customer profile for this, right? For the 1/3 pay customer, right? You mentioned that it's available only to people with an 800 plus credit score, right? But
no,
I'm trying to think.
An example.
Yeah. No, I'm just trying to think about, like, what is the, if you're saying, like, people go into debt 50, 60,000 rupees or something like that. So then I'm guessing that the income that you're looking at is like maybe 1.5 lakh, 2 lakhs a month, something like that. I mean, is that what how do you profile your customers is my question, I guess.
So what we are doing is that we're giving this product to a superior risk customer, right? Income does not matter.
Okay.
Risk matters. And what I'm saying is that in general, when people are in a pinch, the amount what they are in for a pinch is 30 to 50,000 rupees.
Okay.
Right? Now I may be earning 20,000, I may be in pinch for 30,000. I may be earning 1 lakh, right? But my expenses that month were 1.5 lakhs.
Right.
So the amount for which you are a pinch is 30 to 50,000 rupees. If you're in a pinch for, if you're in pinch for 2 lakhs, you will take a personal loan.
Right.
But if you're in a pinch for 30, 40, 50, 60,000 rupees, you will find short-term solutions.
Right.
And most of the time, just for the hassle, just to avoid the hassle. Like you're someone who can afford that 42% probably, in their head. But it's an unnecessarily amount you are going to pay just because of that. Yeah. That's true. I think that's absolutely true. Depends on the kind of audience. Again, I can reference back to being a founder and revolving on credit, because that was one of the easiest credit lines available to a early founder.
I know what you mean.
So
yes,
and people do that just because they think that, okay, you know what, whatever I'm paying now, the time value of money of my startup is way more, so I'll make it up, and so on and so forth. I'm sure there's some self-justification that people do. But just to pinpoint on, then you're saying the risks are safer for you. You've let's say you've made the the entry barrier fairly solid. So your downside is somewhat protected. But what about the upside? How do you make money then when in a way you're making sure people cannot revolve credit, right? Yeah, like
no, not really.
3 months ke baad only they can really revolve credit.
Not really. So what happens is that there's some transition that people convert into longer tenure EMIs. BNPL networks are now easily available from the likes of Pine Labs, etc. Right? I can get a 0% EMI on my Samsung credit. So these are sources of your income.
I see. So you further channel the actual credit through some other network. So you're not the credit provider, is it?
No, I'm not the credit provider because I have lending partners. But more fundamentally, I'm saying that there are more income sources. Sources like I made a spend for 80,000. Now 3 months doesn't suffice for me. I need to convert this into a 12-month EMI. That's one example. Or I am going to buy this Samsung fridge on Chroma. I need a 12-month EMI. Now that 12-month EMI is available at 0 cost because Samsung is submitting it. So that income is available. And so on and so forth. That becomes a very meaningful source of income.
Okay, so obviously then you have your sort of OEM partnerships, you have your other BNPL channel partnerships, and so on and so forth.
On the card, right, you get paid an interchange.
Okay. Yeah, that's standard card income. Okay. So from a consumer point of view, the consumer is never really paying. Their consumer is still just using your service, and if at all they are using a channel service or extending credit beyond the 3 months which you already provide, or doing more further splits, that's when they pay, just like they would pay directly to any of those other partners.
That's correct.
So what can you build on top of this? I mean, this is obviously a great sort of. I love the fact that the premise is simple.
Yeah.
Right. It's 1/3. It's not half. It's not 6 months. It's 1/3. It is what it is. And seems like most of your customers. Yeah.
This is a highly engaged customer, right? High credit score, usually affluent. They trust you. You have their payment source, right? Cross-sell anything. Once you have 1 million card base, I think opportunity is meaningfully unlocked. Somewhere this customer is even more pristine than a typical credit card customer.
Right, can you expand on that?
Since I'm not letting every credit card customer get paid 1/3, only a part of it. Actually, only 50% customers qualify. So this customer, this product is much harder to get than any credit card out there.
Right.
Do you see anyone who doesn't have a credit card also be your customer though? Because even that's like a target population, right? Which
Yeah. So
you
our
have to go after.
differentiation or our discrimination is basis risk that you have demonstrated on the bureau, not anything else.
Right.
And that could be
So
through a home loan I have had forever, and
car loan, home loan,
whatever
consumer
reason.
loan, personal loan, whatever, right? Could be anything.
Right, right. Right, not necessarily a credit card. So now, Nitin, you found the product market fit to launch. You guys have obviously launched. It's doing great. Where is the directionally, like, how do you now get to your, let's say, the 5-year plan, right? Amongst how much of the market share are you going after with this product, or let's say other stuff in the pipeline? And if you can talk a little bit about what's coming down the pipe
So
in the
our
next, let's
12-month
say,
goals
18
are pretty
months.
clear.
Yeah.
In 12 months, we should be about 1 million cards strong.
Okay.
So I like to comment only on short-term goals. Vision is so the vision is quite large. The vision is that for this industry, the entire credit card industry, you raise the bar. When Amazon and Flipkart happened, they raised the bar for entire e-commerce. When Zomato and Swiggy happened, they raised the bar for entire delivery. We want to raise the bar for entire credit card industry, irrespective of what market share we end up with. But 5 years from now, the banks should offer such a superior product to the customer than what they're offering today, that the entire quality of industry has meaningfully gone up. That's what we did with payment gateway industry, right? In 5 years' time, we changed everybody's game.
Yeah.
So as a startup, right, we know in 12 months we'll get 1 million customers. In 5 years' time, we'll be large enough to do an IPO. But whatever we may do, at bare minimum, we will transform the credit card industry so that each and every consumer who has a credit card today or in the next 5 years feels that they have a significantly superior product than what they had back in 2021.
So what are some of those vectors which you think that are there for improvement? Like, what's the low hanging fruit you see in front of you, right? That are the
I think not enough payment use cases are done well, first of all. You look at a customer like yourself, you are doing spends from a bank account like UPI, like rent payments, you are like school fee payments, you are using simple lazy pay, Ola Money postpaid for certain places, you are using Bajaj Finance or Zest Money for deals at certain places, you're of course using credit card for certain places, your family members are using cash at certain places, their own debit card at certain places, their different bank account at certain places. When you're traveling abroad, you're using cash at certain places, right? All these use cases can be solved for under a single umbrella.
Is there not today? Yeah.
The second thing that can meaningfully change is just transparency. The fact that GST is different when a charge is applied, the fact that my reward point value keeps on changing, the fact that a annual fee can come into my bill at any point of time and I have to keep an eye out of what has come in my bill. Right? I don't expect these things from Uber or from Amazon.
right.
But I'm very conscious about that these things may happen with my credit card. Right? We have built an entire company to protect customers around this. So this should fundamentally go away.
Yeah.
The third thing that can happen is that the experiences can be truly magical. I mean, each of us have had reward points and I have redeemed those reward points. Right? It's nowhere as intuitive as it should be.
Oh my God, intuitive. I spent like I have so I pay for a lot of our services and I have an ICICI card. Oh my God, it took so long to get through. And Citibank, I haven't even been able to get through yet. Right? I mean, like it took hours. Not
Think about this. Cred had to build a company so that you could repay the bill easily.
Yeah.
Repaying a credit card bill is not easy.
Yeah, it's not.
Yeah.
Yeah.
I mean, imagine that.
Yeah.
So experiences can be meaningfully better.
Yeah.
Right? Imagine the kind of rich history they have, the kind of insights they can present to you on your spends and make you better at spending.
Yeah.
Right? So all these are opportunities And I just want 5 years from now, all banks raise their game to that level, which I just described. We will lead the way, we will show the way, but I want everybody to raise their game. That should happen.
Yeah, actually, spend analysis seems like the lowest of low-hanging kind of things that some of these
Everything
banks should
is.
apply. That just
Everything
seems
is
so
important.
simple that they can do. You spend so much on food, so much on entertainment, so much on services, so much on this. Just, I
No.
mean, like that seems like the easiest
Banks
thing in the
can't.
world to do.
Yeah,
No,
well, for a
Yeah.
bank, that's
they
the
will.
nightmare.
They can and they will. I have seen, when I build payment gateways, right, I've seen them transform themselves over a 5-year period and build wonderful things up. They sometimes needs inspiration. They sometimes need the right technology partners. We will provide the inspiration, industry will provide the technology partners, and magic will happen. I am a believer. I believe that banks in India, particularly, can create magic, but they just need some inspiration and the right technology partners.
Yeah, that's true. And well, focus on one problem at a time, uh, and solve it deeply rather than just copy the latest product in 12 months, and that to a bad copy of it. That's one thing which banks are good at. But awesome, this was I mean, inspirational for sure. And I firmly believe, yes, credit cards as a people have there's also another school of thought around saying that this whole BNPL and these other things will supersede sort of credit cards per se, right? The physical card or the Visa
They will
network,
all coexist. Everybody
yeah,
has their
necessarily may
space.
or may not be there. But I definitely, what you described is net 5 years from now, it's better for all of us.
Yeah.
That's for sure.
Nitin, can I make a feature request from you at as you're looking at this out? When somebody calls for support, please don't make me spend 5 minutes listening to the balance of what I owe for the credit card. Please just give me a menu that I can get to immediately.
So
This is the
in case of Uni, our support works on WhatsApp. So like you search for a
perfect.
friend's name on WhatsApp,
Right.
Shiladitya, you would just search for Uni. You will possibly
Yeah.
have a message from us reminding you about or sharing a statement, and you just start typing there what your problem is, and it will get solved. So our primary interface for support is WhatsApp. And
That's
WhatsApp, you
excellent.
can just search for us. Just go to WhatsApp, search Uni, and start
Yeah.
talking.
Yeah, no, that's awesome because you don't keep us on hold, right? I mean, like, so I was in the US last month, and again, I don't mean to turn this into a complaint session, right? I was in the US last month. My card kept getting blocked because of international transactions. Couldn't fill fuel, so I'm trying to call the bank, and they put me. It takes me 25 minutes to get to a
And
person, right? And
our
so,
support is 24/7. So it
yeah,
doesn't matter what time zone, what hour, it's the same for us.
How
yeah,
it should be. It's
it should be, yeah.
yeah.
Yeah. And I'm saying this is what will also happen for banks in the next 5 years. I'm pretty sure of that.
I hope you're right.
You're really setting expectations very high from banks, I must say, Nitin. I mean, no other tech founder has come on this show, especially fintech ones. And while they've praised the government for making UPI, they've praised banks for being early adopters and whatnot, but they've not had so many expectations from them, which,
With time,
if
I've
truly
seen
what
them
you
catch
say,
up, right? They may not be able to catch up
yeah,
in 12 months, but given long enough, they will catch up. We always
no, I
overestimate what we can do in short term and underestimate what can be achieved in long term.
True,
very true,
true.
very true.
Cool.
Awesome. And on that note, Nitin, you obviously are building an awesome company. Do you want to do a shout out to folks who are interested in getting in touch with you, whether they are whether you're hiring, whether where's the best place to reach you personally, Twitter or LinkedIn or
Yeah,
anything you can share?
anywhere is good. Twitter or LinkedIn, or just drop me a mail at nitin@uni.cards.
Oh, awesome, great.
Brilliant.
I'll just also remind everybody quickly that we'd really appreciate reviews and ratings and things like that on the various podcast platforms that you're listening to. Please do go ahead and do that for us. That really it's very helpful to us. Thank you.
Yes, and Nitin, I mean, thank you so much for this. This was a great
Thank you.
chat, and of course,
Likewise.
we will look forward to the next 12 months of uni and the 5 years of the industry for sure.
Sounds good. Speak soon again. Bye bye.
Thank you.
Thank you.
IVM.